welcome back to brand new trading week, brand new trading month, brand new trading quarter. So let's have a quick look at the news actually before we go ahead, because always have a little look at the news, the high priority news, see what's coming out this week. Of course, on Friday we've got non-farm payroll, Chinese bank holiday throughout the week. Really, that's only going to affect the Asian session traders. Do have some Aussie news overnight tonight, or in the early hours of tomorrow morning actually I should say. The cash rate, also Kiwi rate statement and cash rate on the early hours of Wednesday, so look out for those if you're trading any of those currencies. But yeah, non-farm payroll will probably be the big one. So let's start off with looking at USD, looking at the dollar index. And really that's going to be the basis of this little forex webinar. The dollar index, the strongest, probably, I mean, I don't know all the currencies, but I would say either the strongest or one of the strongest currencies in the world. Just look at this weekly price action, really nice actually. And what I've noticed is that we come back in the correction to this 8 moving average, and then we start to see buyers come in again. So whenever we're at this 8 moving average, or I should say 8 exponential moving average, because I use EMAs, that's a great time to start looking for strength to come in on USD. So as you can see, we've had this big two nice bullish weekly candles there. Last week's was a bearish candle, and today's candle, today's and a few hours of Sunday, bearish. So what I am looking for and what I am anticipating is price to pull back a little bit further on the dollar index towards this 8 moving average, maybe even towards 110, and then anytime from then, in fact anytime from price being around this 8 moving average, I would start looking at smaller time frames for buyers to come in, looking for changes in cycle, looking for higher highs, higher lows, looking for morning star patterns, bullish engulfing candles on smaller time frames. Obviously I'm not going to trade the weekly time frame, although I could do that obviously. Yeah, once, like I say, prices around this area, then that is that value area where I would expect to see buyers come in. So what we're likely to see is further USD weakness, and I would say potentially for the rest of the week, at least up until Friday, because we've got non-farm payroll on Friday, and we don't know what's going to come out there. Now here we had 1-2 weeks correction, then on the third week we started to see buyers come in. Here we had 1, 2, 3, 4 weeks of correction before the buyers have come in. So I'm looking at potentially 2 weeks, but it could be longer. So all I'm interested in really is for when price gets around here. In fact, I'm just going to put an alert there. Now moving averages are what's called dynamic, so they will move with price. They're not so this 8 moving average will potentially be in a couple of days time or a week's time a little bit higher up, but I want to know when price comes into this kind of zone. So I'm just going to put a little alert here: price around weekly 8 EMA, because that is my time, that is my kind of time to start looking for buys. It's my area of value, if you understand what I'm saying. I'm just wondering if that is anywhere near a fib level. I don't know. Wow, would you believe that it's very close to the 61.8% retracement? So we could see a 61.8% retracement of this move here, maybe. So yeah, okay, that's interesting. So I'm going to leave that on there actually. So likely to see some USD weakness. So if you're a trend trader, for instance on Aussie USD, you would be staying out of the market, because this is the weekly on Aussie USD, likely to see some further buying momentum towards this 8 moving average before we see the resumption of the downtrend. If we see the resumption of the downtrend, obviously, we are bearish. Moving averages are bearish. Price action is bearish. We've had 1, 2, 3 bearish weeks there, and we're a little bit overextended from that 8 moving average and the 20 moving average. So we're likely to see some strength there in Aussie USD. So again, that would be counter trend. And personally, I wouldn't be looking to, go long on an end of day trade, for instance. I'd more be interested in trading that on a 4-hour or 1-hour time frame. So if I was going to go long on this as a counter trend move, I would be looking for price to firstly be trading above this level, because we have resistance, potentially resistance there again. So what I would like to see is price break through this level, pull back, retest, and then I'll be looking for a morning star pattern there, bullish engulfing candle, hammer candles, some kind of buy setup once we've broken this level. So if you're interested in counter trend moves, I would be looking for a break and retest of, it's around about 65, we'll call it 65.25, somewhere around there. But yeah, I also like to use moving averages for entries as well. So I'd want those moving averages to be bullish, which are just about crossing at the moment. I want to see them open up more. And what I'd be looking for is, so if I was looking to buy, I'd want the moving averages in a bullish order. So, the 8 above the 20, I'd actually be looking for price to, personally, I'd like it to come back into the 20 moving average. So I'd like those moving averages to be in the right order and price to come back into the 20. Hopefully it's around about the same area as our area of resistance here, and I'll be looking for a morning star pattern off that 20 moving average. That's my preference. I don't personally trade a horizontal support and resistance. I like to use moving averages, but you could equally just take off the moving averages like that and purely trade a price action trade, which would be a break, pullback, retest, bullish continuation pattern, look to trade. So you could either do that, or if you want to trade moving averages, you'd be looking for them to cross over with the 8 above the 20. You want to see some angle and separation like this in this order. You want to see price pull back into the averages and then start to move away again. So I do see, like I say, further short-term weakness in the dollar index and short-term strength in Aussie USD, and it would be the same really for the Kiwi USD as well. That's actually hit a bit of a level actually. If you look at the weekly, it's hit pandemic lows here, and again on the weekly, big old bearish move there. So it would make sense to see some correction anyway towards the weekly moving averages. So Kiwi USD, for me, intraday trades along with pullbacks. Again, you've got a little bit of a zone here of resistance where it'd be preferable to see price break above there, make new highs, and then look for your first correction, first pullback. Euro is not really going to be one of my charts to be trading. I'd rather trade Aussie and Kiwi long on the intraday time frames, purely because these corrections on Euro can be very, very messy. I mean, look at this correction here on the daily. We have an impulse correction. This correction here wasn't so bad, but we have our impulse correction impulse. So that was kind of one wave, if you like called waves. And then we have a correction of this move. And this correction is very, very messy. Unless you're trading 5-15 minute time frames, then very, very tough. We have a nice CTL here actually. We break below that CTL and then we start to move again. And then we have this correction here again, quite messy. We have a very nice evening star pattern there. which you could have traded. But yeah, I'm looking at what's happening here. You know, it could get very, very messy like this. So I'm not a fan of looking to get involved in that. This zone here obviously is of interest, previous supports. We could see price come back into that zone. We could equally see price come and, you know, test support, sorry, resistance again here. Don't know whether it would come back that far, to be honest with you. That would be almost, I would suggest, almost close to a 78.6% retracement, which is not unheard of, but that would be quite a deep retracement. I'd be more looking at least towards a 61.8% retracement. I think 61.8% retracement there would be deep enough, and, you know, looking for sales. But, you know, cross-reference it with the dollar index on the weekly and where that is in relation to the 8 EMA. That's what I would say, because when you start seeing the buyers come in on the dollar index, you know, this is the inverse chart. You'd expect to sell Euro USD. Dollar CAD, again, put the weekly on. Look how far we're extended away from the moving averages on the weekly. Expect to see price pull back towards the 8 moving average. So there's actually a nice bit of resistance there. So we could come back into this zone here around about 134. So any intraday shorts that you might want to look for, which is obviously counter trend trading, 134 could be a good final target on this. Or of course you could target the 8 moving average on the weekly. So let's just sync that actually across all my time frames. So yeah, this little zone here, I'm going to sync that as well. Okay, that's our support, as you can see. So similar to, you know, looking for price to break resistance on Aussie USD and Kiwi USD, I think looking for price to start trading below our support here on USDCAD would be the safest port of call if you're looking to place the counter trend sell trade. Look for price to break down below. Look for the pullback, retest and rejection of the zone. Or if you're a moving average trader, you know, with your moving averages, you're looking for the moving averages to be in the correct order, which they are at the moment actually. But I want to see price down below this low here, then pull back towards this 20 moving average. Obviously the moving averages will be down here when price is down here, assuming it all goes according to plan. Yeah, and then I'll be looking for a sell. So what I'm looking for is price to have that move down, pull back for me towards the moving averages and that 20 moving average, start to reject, and then looking to target 134. So, you know, for me, unless proven otherwise, you know, we are in a correction phase of the dollar index. So expect to see some counter trend moves. Far easier to trade them on smaller time frames rather than, you know, daily time frames. If you're an end of day trader, you're literally just staying out of the market. You might want to look to cross pairs, for instance, to trade rather than any dollar pairs. So be patient. You know, these USD markets are for intraday traders only at the moment. And then once, assuming we see the dollar index uptrend resume, then you end of day traders can just jump back in and ride the next impulse. So yeah, bit of patience needed for you guys, intraday traders. There might be some opportunities to short the US dollar with corrections. So that's it for me, guys. Any questions, drop them in the comments. Share the video if you know anyone that could be interested in the information. Like the video if you liked it. And I can't think, like, share and subscribe. If you're not subscribed already, then yeah, please subscribe. So yeah, that's it from me, guys. We'll see you again in the next video. You take care and trade safe. Bye for now.